All right, guys, so now we're getting into it. This stuff is really, really, really key. You need to take your time with it. We're going into support and resistance, or supply and demand, whatever you want to call it. But support and resistance is printed on the markets by reoccurring supply and demand. Due to a variety of different underlying catalysts, supply and demand reoccurring in the market is what builds support and resistance. And these support and resistance levels is where we look to enter or exit trades from. So this stuff is so important. This episode might be quite long, but take your time with it. And it's just the start. We're going to go into more complex support and resistance stuff later on in this series as well. I hope you enjoyed this episode, so let's get into it. Yes, guys, so we're going to get into it now, okay? We're going to be having a look at horizontal support and resistance. This is where we really start to get into actually forming analysis now. This is the foundation of creating structure almost, all right? This is just the basics. We're going to get into this on a much deeper level. What I'm going to do now is I'm going to explain to you the concept and the underlying psychology of what support and resistance actually is, why it's printed, why we use it, and how it is important to us going forward, okay? Right, guys, so we're going to take a little look at this, okay? Support and resistance is formed by repeated demand or repeated supply at a specific price point over and over again. And what I mean by that is this, okay? The Japanese candlesticks that we read on the charts, they are telling us something about the supply and demand of the asset that we're analyzing, all right? That's what the charts are actually telling us, okay? It's just in the form of candlesticks, trying to overcomplicate it. And the way I can actually simplify this to you is by doing this, all right? You can read and analyze the supply and demand or the price point or the time and price of any asset in a variety of different ways. If we looked at a line chart, for example, this really simplifies it, all right? And this is showing you over time and price the battle between the supply and demand of Bitcoin and the battle between the buyers and sellers of Bitcoin over and over the years, all right? Let's just head back to the candlesticks because that's where we do the bulk of our analysis, but I was just showing you how you can kind of see things in a different way, okay? What I want you guys to think about is this, okay? If we have a price point, let's call this price point $10,000. Yeah, let's call this price point $10,000, okay? And say, for example, what we have is Bitcoin does something like this. Yeah. Just imagine this is candlesticks, okay? But what's happened is this. All right, Bitcoin has come down, the market has stepped in, and the market has found significant demand at this price point, which has brought in push of price to the upside, okay? The price has increased. This is the 10,000, this is 10K, all right? This price point is 10K. And as the market has come down to it, people have bought in at 10K, they found demand at 10K, and the price has gone up. For whatever reason, it comes back down again. Again, more people buy at 10K, the price has gone up, and it comes down and repeats that pattern. But what this has done for us as analysts is it's given us a level of support. Boom. All right. So now we have our level of support. And what it's been formed is, it's been formed by repeated demand at $10,000 for the asset of Bitcoin. That's what's happened there, okay? That's why support is printed, and that's the significance of it, okay? Now, we're going to fast forward. For whatever reason, okay, price actually breaks below. Now, going forward, for whatever reason, price actually breaks below 10K quite significantly. And instead of going back, it rejects, okay? And it rejects again. And it rejects again. This is still 10K, all right? Remember that. This is still 10. So what's actually happened is the demand that was once found at 10K here and here, which was supporting the market up. It was supporting the market. That's why it's called support, has actually now broken. And there's not enough demand at this price point now to prop the market up. So now what we have found is resistance. There's been repeated supply there's not enough demand to send the market back above 10K anymore. And what we're actually finding is the demand runs out at 10K. We try to trade higher, but demand runs out. People take their money out. People sell. And they repeat that pattern over and over again at 10K, which forms resistance, okay? So now when we zoom out, we can see we once had support at 10K, and then now we have resistance at 10K. what you see here is a common theme. It's that complete flipping of a certain price point from support to resistance, and then maybe back into support, and then maybe back into resistance. We'll have a look at some real examples on the charts now. And yes, we're going over and over and over. We're going to go over this stuff so much, right? So this gets embedded into your head. This is so important. This stuff is key. And what I want you to understand is this, all right? For whatever reason, there was a catalyst within the market, yeah? In this context of the market, right? At one point, there was enough demand to keep the price above 10K. People kept buying at 10K. The market found Bitcoin an attractive enough asset to buy at 10K, okay? Which is why we kept having the prints of the rejections and the bounces as support at 10K. But then for whatever reason, at this point, and it's saying the 2nd of January, for whatever reason at this point, yeah, that demand was lost. Maybe there was some sort of macro, fundamental catalyst within the market, which everybody sold their Bitcoin. All the market participants got out, and then the prices went majorly lower. Let's say maybe now we're at 5K here. All right. Okay. And but there was enough demand to keep the market at 5K. Sorry for that really being unneat. But there was enough demand to keep the market at 5K, for example, okay? And then we bounced. And then all of a sudden, really positive catalyst comes in the market, and we break back above 10K, and the pattern prints, and so on and so forth. This is the way the markets work, and this is how support and resistance is formed, but it's all formed by the supply and demand of the asset, all right? Supply and demand runs the markets. It runs the whole of the financial markets. It runs the whole of the financial machine. There has to be a buyer and a seller. There has to be supply and demand for the markets to move, for prices to increase, for prices to decrease. Once you get your head around that concept and you are able to connect the dots between supply and demand and support and resistance, your life as an analyst is going to be much easier, okay? If that was a lot to handle, don't worry. We're going to go over this so much, okay? We're going to go over this so much. You can watch, you can re-watch, you can go over this, and we're going to go into this in so much more detail, so please don't worry, okay? But now we're going to actually mark this up on the chart so you can see it in real time. The best example on Bitcoin, I would say, for us to learn and for us to teach is the 25K mark in Bitcoin. All right. And we are going to use this as an example for so many different things going in this course, but it's just key. And you can say it's cherry picking, which it kind of is, but it's good for you guys to be able to get to get the concept of these quite tricky ideas and these tricky theories. Okay. So we have a price point here of $25,000 in Bitcoin. And what I want you guys to do is I want you guys to think about this as a story. All right. You need to think about this as a story because the markets are a story. Bitcoin right now is a journey. All the assets that we follow and track as crypto traders and investors, there is a story to them. All right. We have massive catalysts like the FTX scandal, which will which will take the demand for the assets out of the market so the prices will fall. We have really positive catalysts like the ETF and the Bitcoin halving, which increases demand, which will increase demand, which will soar prices up. Okay. You need to kind of be able to read the markets as the story, as it's telling you something. This information that the candlesticks are printing are telling you something. Okay. You need to always remember that. There's a reason behind everything. All right. Nothing is, yes, the markets can be random, but there is really always some sort of fundamental or some sort of macro or some sort of psychological reason as to why the charts are printing what they are printing. All right. Don't blur the lines. All right. Don't blur the lines. Connect the dots. Always. You are an analyst. You are trying to project and you are trying to make very, very heavily weighted bets and guesses on the direction of the market. You need to have an understanding as to why you would do that. So let's break this down. All right. So on the 13th of June, we sold into below 25K. So for this whole price point, for this whole time, yeah, 25K was the ceiling for Bitcoin. This was this price point. And you can see the significance of it because look, if we zoom in, yeah,
look how accurate it is. It's like we had 1 tap, 2 tap, 3 tap, 4. Yeah. And we couldn't break above. There's a reason why, for whatever reason, the market was printing and trading below 25K. So for 266 days, there was not enough demand for the asset of Bitcoin to take prices above 25K. There was enough demand just about to take up to 25K, 4 times to be exact, just around. But then we had rejections, all right? But then around here, on the 6th of March, there was some sort of catalyst in the market. And I'm sure if we go back and do the digging, we can find out what that was, which soared prices and brokers back into this range above. And now we have seen the flip side happen. Look at the difference. Okay, so we were rejecting it. So this is now resistance. We are resisting, resist. We can't go higher. But now here, for example, we are supported. The market is supported by the demand at 25K. So like you can see, for whatever reason, for 266 days or whatever it was, the market couldn't manage to trade higher, and it was resisting. There wasn't enough demand. But then this candlestick here, this market printed a very significantly strong candlestick, which broke us into this realm of above 25K. So now what this tells you is this. Look, I want you guys early on to think about these tricky concepts. I want you guys to think about the difference in psychology of these markets. These 2 different times, okay? So like we said, for these 270 days. All right. For these 270 days or 266 days, the market couldn't trade above 25K. But then once we did, and well, it's beyond now, it's been trading above there for some time, but for around 280 days, very similar, we were able to. These two different times in Bitcoin's journey are telling you 2 very different stories. For this time between the 20th of June, 2022, and the 20th of February, or the 13th of March, 2023, the market didn't have enough demand. There wasn't enough interest. There wasn't enough participants. There wasn't enough attraction for Bitcoin, okay? But then once this week came into play, everything changed, all right? Now there was more interest comes in. Now there is demand to hold the market up above 25K. So that is support and resistance. Now what I'm going to do is I'm going to go off and I'm going to print, and we're going to shape the story of BTC, okay? And just for this episode, we're going to keep it on the weekly time frame. We're not going to overcomplicate it too much. We're going to keep it to the week. All right? So, let's do this. Let's play around. So, what we have, we're back in the olden days now, okay? This is 2017. What we had was the market came up, all right, on 2017 on the weekly time frame. All right, and look, as you can see, it rejected, just around 3K. All right, it rejected. Look how accurately it did it as well, okay? This is what I always want you to guys practice this. Look at the accuracy. So 1, 2, remember the double top formation? 1, 2, and then it came up, rejected it again. Then we broke into it. And then what happens? Look, wow, no surprise, we find it as support. That same flip. So for whatever reason, there wasn't enough demand back in 2017, the 17th of July. We couldn't find the demand, but then we did, all right? We did break above it, and now we begin to trade above it. And let's follow on. And then what happens, all right? We have this price point here. Look, very, very key, because we had a little rejection. So for whatever reason, the market rejected that there. And you know what? I'm going to put a little level on there as well, because that's very key support. And as you can see, look, yeah, we found, there was enough demand around, let's call it 5,800 K on BTC to hold it up. But then for whatever reason, all right, we sold off. But let's go up to here as well, and we're gonna jot all of these on. So that's obviously a significant price point, because we had some sort of rejection there around there. So we're gonna add that in. So let's talk about the story. So we couldn't break above here, then we did, then we found a support, then we come up, we find this level of support, we find this, we trade all the way up into here, we reject off here, we come back down, we find support, we break back down into this range, okay? And look, I've only jotted that on from here. You see that price point there that I added that on? Look at the accuracy. Look, how many days is this, right? So from here to 609 days apart, yeah, that accurate little price point there was then used as support again. How crazy is that? And look, this level of support here was again founded as resistance there on that week. It's so crazy how this stuff works. But you guys need to go and play around with this and practice it. And look, we can even add on this price point here, yeah? Look, we'll add that on as well because look, resistance, resistance, resistance. And let's keep going on. Right, so look, let's be accurate here. So with that price point there, around 19K, back in the 11th of December, look how significant it plays in the future, all right? Hang on, sorry. Look how significant it plays in the future. 1,805 days apart, the rejection there was then found there, and it was a key role in the development of Bitcoin around there as well. Okay, that's how important support and resistance is. That's how important the relationship of the supply and demand of an asset is to the market participants, which are responsible for printing all of this data that we analyze. Yeah. This is why it's so important to get your head around this stuff. And this is why it's so important to understand the relationship. There wasn't enough demand to send the prices higher above 19K on the 11th of December, 2017. The markets do and don't have a short memory, all right? Yes, eventually we burst past it and we traded higher. But let's remember, look what happens. There's no surprise that the market struggled there a little bit and it couldn't really break above it straight away, okay? So always just remember that. And if we go on into the future, look, again, that price point came into play so significantly. And look at it. It's so accurate how it works. And we can do the same. Let's just zoom out and plot them on, okay? Because you can do this, all right? If we zoom out and plot them on, look here. So we have like up here, this price point. We have that price point. We have even there as well. And obviously, we're going to talk about how to actually plot on key significant levels and what they mean in later episodes when we're mapping and stuff like that. But this is just showing you very simply support and resistance and the relationship of supply and demand. And you can see here, look at the market come up and test. And what I'm going to do is this. Ready? Boom. Okay. Look, you can see how on the lines it comes down. It's very simple stuff. Very simple stuff, yeah? It's just showing you where the market has kind of rejected it. There is rules of thumbs, and there are important things we like to look for when we are plotting support and resistance, okay? Which we're going to go into in much more detail. Okay, I'm just showing you guys the simple kind of format of it, how to look for it, how to identify it, and what it means in the actual relationship of it, and why it's significant to us, okay? Because that perfect 19K example there showing you perfectly that at one point that was just a random sell-off and it printed a rejection. But then in the future, it played a part here 1,000 days later, was it? I think it was 1,000 days later. 1,000 days later, it played a part. And then also as well, 500 days later, and 800 days later, it played a part as well, okay? So this is why when we plot support and resistance and we see the prices come down back into around them areas, we can anticipate certain maybe rejections and certain things. And as we go on in later episodes, you'll see why that's important to us and as traders and why it's significant to us, okay? But anyway, guys, I hope you enjoyed that video, yeah? There's so much more to go into. This is just the beginning, all right, of support and resistance. And you can see just how I quickly added on all them lines. You can look and go through and see how these things come into play. And we're going to go into this in much more detail, and it's going to be much more complex. You're going to start to understand it much more. But what I want you guys to do is go off into the charts and go off into the charts and go and apply it. Go and try it. Go and add your own levels of support and resistance. See how they align with key numbers. Like look at this one, for example. If I just put that to there, so, is that right? Yeah, sorry. If I had 31,000, boom. So that's a very key level. And look how many times the market came down and tested it. If I put that to 19K, look how many times the market came down and tested it. If I do 25K there, look at the accuracy. And go and have a play around. Go and identify key points in the market, yeah? Go and identify key points in the market where you see reactions and you see multiple tests. Okay. We're not going to make this video too long. We're going to go into this sort of stuff in much more detail in later episodes. But I hope you enjoyed that. Take your time with this episode, guys. This is the foundational stuff. This is really, 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 really important. And you really need to get your head around it. So watch this video as many times as you need to. Take notes. Go and practice on other assets. Go and practice on other time frames. We're doing all this on the weekly time frame right now. But in later episodes, we're going to go into things a little bit more deeper. Thanks for watching, guys. And I'll see you in the next episode.
All right, guys. So I hope you enjoyed that episode. As you can see, this stuff is really, really key. This is where you're going to be entering trades from or exiting trades from. And it's what actually builds your market structure. There are a lot of successful traders out there that use supply and demand and support and resistance on its own to make really key informed decisions. Take your time with this, even if it takes weeks. There's no rush. But I hope you enjoyed the episode, and I'll see you in the next one.